Hey guys, welcome back to my channel Investing Untangled. So this is the third video in my video series on stock analysis, and today I'm going to be talking about qualitative analysis of stocks. So in my previous two videos I talked about quantitative analysis and how to assess valuations, meaning figuring out a buy price for yourself which is reasonable. So I've left the links to those videos in the description below, and if you want you can check them out. So in today's video, what we are going to see is we will try to understand the business in detail. We'll try to understand what kind of a role the management is playing. We'll assess the integrity of the management, and finally we'll also try to figure out if there is a competitive advantage to our business. So there are specific indicators to all of these, and I'm going to discuss those in detail today. So let's get started and I'll show you how I do it. Okay, let's go back into the analysis, and I showed you in my previous videos that this entails 3 steps. So in step 1, my first video, I showed you how to do quantitative analysis or the fundamental analysis. In my step 2, I made a second video showing how to assess valuations and how to figure out a buy price for yourself. And in this video, I'll be talking about qualitative analysis, where we'll try to understand what the business model is, we'll try to assess the competitive advantage and evaluate the role of the management team. So what does qualitative analysis mean? It means basically we have to understand the business model in detail. We had to understand what kind of a competition the business is facing and how are they making money. Then step 2 is we have to assess the competitive advantage of the business. Are there other competitors who are giving very fierce competition to this business, or does our business have a competitive edge that it will still keep growing and it will not bother about the competition? In the final step, we'll evaluate the work that the management team is doing in terms of deploying their cash in growing the business. And we'll also figure out the integrity of the management team, what kind of professional experience they've had, and what kind of a history they've had. So let's go one step at a time. So we'll start with understanding the business model first. And how I do it is by going to 10K, which is the annual report of the company. Every company in the US has to have an annual report, which is called the 10K. And you can access it from the investor relations page of the company website. To start with, I'll start with the business overview, and this will explain to me how the company operates, how the business actually generates money, what kind of acquisitions the business has done, what kind of subsidiaries the business has, and everything else. So this is very important to get a complete overview of the business operations. The second thing I look at is the risks section. So in this section, the management will discuss any kind of risks to the business that it is facing, any competition, any other external circumstance that can affect their growth, that can affect their revenues and net income. So this is a very important section where you should read it in detail and understand what kind of risks the company has. And finally, I read the management's discussion and analysis part, where the management discusses what kind of financial situation the company is in, and they give you kind of a guidance of how the future looks like in the next year and the year after, what kind of growth they're expecting, what kind of competition they have, and how they will outpace their competition, etc. And this is also a very important section to sort of get an overview of the whole business and how the management is working to operate it. So here I'll show you where I find these documents. You can also access all this information from the investor relations page of the website of the company. So I found this website called 10q.com, and it easily pulls up all the financial information of all the publicly traded companies in the US. So all the quarterly and annual reports can be found here very easily, and I'll show you how it works. So if you go to the search bar and type the ticker of the company, here we are looking at Google. So this brings up the page with all the financial information of Google. So all these were the financial documents that were filed with the Securities and Exchange Commission, SEC. And 10Qs are the quarterly reports and 10Ks are the annual reports. So the last annual report that Google filed was in 2019, and you can access it right here. You can click it and it will bring up the 10K that was filed in 2019. So the good thing with this website is that it already gives you the financial information up here. So the balance sheet, income statement, and the cash flow statement are all available here. So there are clickable links, so you can click on view and it'll take you directly to the financial document, and you can go back by clicking top. The same with income statement, you can click view and figure out what were the revenues, what were the taxes, and what was the net income, etc. And then you can click top, and the same with cash flow statements. And then going down to the 10K, the actual document of the Alphabet Corporation. Alphabet is the parent company of Google, and you can come down to the contents of the document, and it is very nicely organized here. So the first thing we look at is the business overview, and that is here. All these have clickable links, so you can actually click on it and it'll bring you down to the business section. So here you can read about the overview and you can understand the whole business model that Google has, how it makes money, what kind of subsidiaries it has, what kind of acquisitions it is planning, how it is planning to expand its business, where it operates, etc. And the next thing I told you I look at is the risk factors. And there's also a clickable link. You click on it and it'll bring you down to the risk factors. And here the management discusses what are the risk factors that can impact this business, be it external risk factors or be it in terms of competition, and how they're planning to tackle those risk factors. So this is also a very important section of the document, which will give you an understanding of where your company stands. And it'll also tell you if your company has a strong competitive advantage over its competition. Okay, the third thing that I look at is management's discussion and analysis. If you click on that, it will bring you down to the management's discussion and analysis in the document. And here, so this is also a very important section, because here the management discusses what kind of a financial situation the company is in, what they plan to do further, how they want to expand the business. They also give you some kind of guidance as to how the business is going to perform in the next years. So this is also very important to read and understand where the business stands right now and what kind of a guidance the management is giving going forward. Okay, now that we understood what kind of a business model our company has and how it makes money, the next thing we look at is the competitive advantage of our business, which is also called the economic moat. Warren Buffett coined this term, the economic moat. So let's look at how we can assess that. One of the first things that you look at is a strong brand. Does your company have a strong brand? For example, Coca-Cola has maintained its brand for a very, very long time. So the next thing is secrets like patents, unique proprietary technology. A lot of pharmaceutical companies like Pfizer, Novartis, etc. use this kind of moat where they protect their products by filing patents so the competitions cannot erode their products and their technology. The next thing is exclusive control of the market. For example, Boeing. Boeing is a company which produces aircrafts, and it is a very sophisticated industry that it operates in. It's not easy to make another company as big as Boeing and make aircrafts. It's an extremely complicated technology, and Boeing has mastered it over so many years. The only other player that exists in this sector is Airbus, and that's pretty much it. So they don't really have any other competition from anywhere else, and it's very hard to compete with a company like that, which has an exclusive control of the market. So the next indicator is switching. What that means is that a company protects its business by making it very hard to switch from its brand. A typical example is Apple. So Apple products are compatible with each other, but they're necessarily not compatible with other devices, and that gives Apple a competitive advantage that the consumers have a hard time switching from this brand. And finally, the last indicator is pricing. What that means is, does the company offer a unique pricing advantage? For example, Walmart or Costco have pricing advantages going for them because their products are extremely cheap, and it's very hard to compete with companies like these because they have a pricing advantage. So before making an investment decision, you have to see the company that you're researching for investment, does it have any of these economic moat indicators? So the last part of qualitative analysis is evaluating the management team. And the way you do that is by looking up the CEO, CFO, and other upper management executives and read up about their professional experience and professional history. You have to know how long these executives have stayed with the company. The longer, the better. And have they been shareholder oriented? Meaning, has the stock price been going up? And has the company been doing a good job at increasing revenues and sales and book value, etc.? The next thing you look at is CEO's annual letters. So not all CEOs write annual letters, but some do, and if they do, you should read them. For example, Berkshire's CEO Warren Buffett writes annual letters to shareholders where he describes the company position, how he wants to move forward, how they're deploying cash to different businesses, if they want to acquire any business, etc. So that gives you a very good overview of of the management and how they're running the business. You should also try to watch their interviews online, especially for big company CEOs. There you'll find a lot of interviews online. The next thing you look at is ROE and ROIC numbers. So basically that is returns on equity and returns on invested capital. So this is the cash that is being generated by the business, and the management's job is deploying this cash to get returns. And you have to see what kind of returns is the management getting in the last 10 years. If ROE and ROIC numbers are consistently around 15% or higher, that means that the management is doing a really good job at gaining returns on the invested capital and equity. I discussed this part in detail in my first video of this series. I'm leaving the link in the description below. If you're interested, please check it out. The next thing I look at is if the company is buying back its own shares consistently and at what prices. I want that the company's management decides to buy back its own shares but at reasonable prices. So share buyback is actually in favor of shareholders because that increases the value of shares. The way we do our research and figure out how we want to buy a company's share at its price, which is below its intrinsic value, the same way the management should do its job as well. And I'll give you an example to show you how that works. Okay, the last thing that I look at is have the company insiders being buying shares. So this is publicly available information and you can access it from websites like Guru Focus or Yahoo Finance. So this is important information for us because this shows that people who are working at the company believe in their management and think that the company is going to increase in its value and the stock price is going to go up. So it is a great indication if the insiders are buying the company's shares. Okay, the next thing I want to show you is how share buyback is actually good for shareholders and how it increases the value of shares and eventually that increases the stock price. So consider a hypothetical company with a net income of $200 and the total shares outstanding that this company has, meaning the total shares that it has, is 100. So that means earnings per share will be $2, which is $200 divided by 100 shares, it is $2, and this is the EPS. And now consider if the company decides to buy back half of its shares. So what happens then? The net income stays the same, $200, but total shares outstanding reduced to 50 now because the company bought back half of its shares. So it went from 100 to 50, and now suddenly EPS looks much better. So it is 200 divided by 50, which means $4. So suddenly the EPS increased for the same company when it decided to buy its own shares back. And this is how share buyback increases the value of a stock. And what generally happens is by increasing this value, the stock price goes up. So let's now consider a real-world example. So in the third quarter of this year, Berkshire Hathaway bought back its own shares for $9 billion. So this was the biggest investment that they did in the third quarter of this year. So as investors, we had to ask ourselves, was it a good price that Berkshire Hathaway paid to buy back its own shares? And let's take a look at that. Okay, Berkshire Hathaway bought back its shares in the third quarter of 2020, and this is the timeline when they bought it, this highlighted region here. And as you can see, the stock price back then was much lower than its all-time high price that it was trading before the market crash. Therefore, the management team, in this case Warren Buffett and Charlie Munger, two of the best investors in the world, figured that the stock price was significantly lower than the intrinsic value of Berkshire Hathaway and deployed a ton of cash to buy back its shares. And this is how we can be sure that the management is on the side of the shareholders and they want to increase the value of the shares and eventually the stock price. So finally here I wanted to show you where you can find actually this share buyback information. So if you go to the Yahoo Finance page or any other financial website, you can type in the ticker. For Berkshire Hathaway, it is BRKB for their Class B shares. And you'll get to the summary page. And then if you go to the financials, and this information is generally in the cash flow statement. So you go to the cash flow statement, and I generally check out the quarterly events, and you will find this information under financing cash flow. And here you see it, net common issuance of stock. And since this is a negative number, so it is minus 8.9 billion. So this is what they spent to buy back their own shares. This was the price we were just talking about that Berkshire spent almost $9 billion to buy back its own shares, and there you can find it. This is how you can check it for other companies also. Thank you guys for sticking around until the end of the analysis. I hope you enjoyed it and got some value out of it. So this pretty much wraps up the video series that I was doing on how to analyze stocks. I showed you the 3-step process that I follow. So in my upcoming videos, I'll be showing you the companies that I'm currently following and that I'm investing in, and why I think their stocks are undervalued and why I think that they have great growth potential going forward. So until then, stay safe and stay tuned to my channel. I'll see you in my next video.